Hello, my name is Cheetie Kumar. I'm the chef and co-owner of Garland, a restaurant in downtown Raleigh that is housed in the same building as King's, which is a music venue, and Neptune's. We are here today talking about PPP and the second round. Joining us are Paul and James from Arnold Porter, Katie Button from Asheville, and just want to thank the Beard Foundation and the IRC for making this conversation possible.
So, hi, my name is Paul Nabhan. I'm an associate at Arnold Porter here in New York City.
I'm Jim Joseph. I'm a partner at Arnold Porter in Washington, D.C., and I'm happy to be with you going through some stuff about the PPP yet again.
Great, and I just want to, thank Jim and Paul for joining us today. And basically what we're going to do is we're going to talk through our own experiences with PPP, Cheetie and I will, and get insight from Paul and Jim on what this new round of PPP will look like, and then answer questions we've collected from all of you over the past few weeks. In March, we had around 140 employees between 3 businesses. And like most of you, we laid the vast majority of them off at the closing of our business in March. When the first round of PPP was released, it really didn't seem to be written in a way that was helpful for us, and we were really concerned. However, when they made tweaks to it, including extending the coverage period and specifically not needing to get to a specific FTE count if you were under mandated restrictions by your governor, we knew that we were just going to take a leap of faith because it seemed to be more useful than we originally had thought. We were fortunate to have a great existing relationship with our bank, TD Bank, so the application process on our end was pretty smooth. We also applied for an EIDL, emergency injury disaster loan, which was far more challenged and difficult to work through. Like many, we have done a lot of pivoting, creating an online marketplace with nationwide shipping, a wine club, takeout, holiday meal kits, pretty much everything that we could possibly think of as a way to generate revenue. We've also been fortunate, though, to be in a state that has allowed us to operate at 50% capacity, which has helped us to utilize the PPP money pretty well. From our perspective, in our experience with the PPP money, the best use of PPP for us was to create the opportunity for business and generate what revenue that we could off of that kind of kickstart. We let the PPP take care of the labor side of our operating equation and those costs of operating, and that really helped offset, revenue losses by eliminating that labor portion from our operating costs. We've been able to get back to about 70 or so employees with our more limited scale of operations. We're not back to where we fully were, but halfway. And now, as we've just been mandated down to 30% capacity in our county, this second round of PPP is really going to be crucial for helping us get to the other side. PPP helped us for 24 weeks during that time period. Now we're 42 weeks into this pandemic. There's still a lot at stake for our businesses in our industry. We're weighing a lot of things right now and are looking forward to some time of the Q&A time with Paul and Jim to get some answers that we and likely you all have for this round 2 of PPP.
Katie, we have a lot of similar challenges, and we faced a lot of similar challenges in the last few months. I think both of us have multiple shops, and we have the added challenge of having 3 places in one, at one street address. We all operate independently of each other. We face the same mandates of limited operations. We chose to only operate outdoor dining. But in the meantime, we did meal kits and spice blends and all kinds of things that we never thought we would be using our dining room for packaging and shipping sites. But 2 of our businesses the music venue and bar are not allowed to operate at all. And there's really no way to, package a night out at the bar or at a club seeing a rock band into a box and ship it anywhere. So we applied for PPP as one entity because we did operate in one building, and Garland, the restaurant, has the majority of the biggest labor cost portion of the operation. So we previously employed 42 people, sometimes 44, but like most everybody who's watching this knows that our industry is not a traditional full-time, part-time kind of workplace. Most people, especially front of house workers, are not 40 hours a week. So when we rehired, we were only able to rehire about 14 people back. Our operations were down about 80%. So spending money, spending the PPP, 60% of it on payroll, it just doesn't make any sense. So we have this added complication of the math of 60% on payroll and then 40%, while rent on the venue and the bar are accruing. It's not forgiven, it's deferred. So now we're, indebted to our landlords for several months of partial rent. And as we go into this next round of PPP, I don't see us being able to make up our numbers substantially for another several months. So that 60%, kind of block on everything really does make it, that the same challenges continue for the near future. As the numbers get worse here in North Carolina, I don't know. We're not sure how the next, 6 to 8 weeks are really going to go with as far as dining in any capacity. So in Raleigh, in our community, there has been almost daily posts from local restaurants with somebody testing positive on their team. So anyway, this is all really scary. And I think at the end of the day, we're just trying to hold on to the people that are dedicated to what they do with us and have worked with us for years and have cultivated careers. And, we want to see them come out of this whole situation with us. So hopefully we can get some advice from you and learn how to navigate in the best way possible.
Thanks, Cheetie, and hopefully we can answer some of the questions that you guys have. So as a quick recap, the PPP program was designed to enable employers to keep employees on the payroll, give small businesses a loan, and if those small businesses use the proceeds from that loan the way Congress intended for them to be used, then they wouldn't have to pay that loan back. In June, Congress made some changes to the PPP program because they saw kind of the conflicting reality with what they thought the COVID-19 pandemic was going to look like when we all went into lockdown in March versus here we are in June and we're still locked down. And some of those changes, some of them were kind of financial, and let's extend the maturity date of the loans, let's expand the covered period for forgiveness, but then some of them kind of just reflecting the reality of the pandemic. So in terms of that loan forgiveness, that PPP Flexibility Act also provided safe harbors for, when you were unable to rehire individuals, or you weren't able to hire similarly qualified individuals, or you weren't able to return to the same level of business activity as a result of the pandemic. The big elephant in the room now is we have the new coronavirus relief bill that was signed into law. I think it was just 2 weeks ago. And there are a couple of key components to the new bill. And it does quite a few things. The first is that it appropriates an additional, $284 billion to the PPP program overall. And it now extends the deadline to apply for a PPP loan to March 31 of 2021. If you recall, the former deadline to apply for a PPP loan was in the middle of August. So our reading of the statute is that you can apply for your very first PPP loan as a result of this new statute. A couple of key points, though, is that if you receive one of the new shuttered venue operator grants, or if you're a public company, you're now statutorily ineligible for a PPP loan. But one of the really interesting new features is that this new bill permits what's called a second draw PPP loan. And kind of the idea behind the second draw PPP loan is that under the first bill, once you got your PPP loan, like you were set, like you couldn't get anything else. Now, and it kind of going back to the theme of Congress just kind of realizing the reality of the situation, they're now permitting you to get a second PPP loan if you meet certain criteria. And the first one is that you can only get a second draw loan, if you have or will use the full amount of that first PPP loan by the time you receive the second draw loan. You have to have less than 300 employees, and you have to have 25% reduction in gross receipts on a corresponding quarter basis. And what that kind of means is that, let's say you were a restaurant and you've been open for 5 or 6 years. You would have to show that your Q4 earnings of 2020 were 25% less of your Q4 earnings of 2019, but for each of the 4 quarters going back for a year. And then you can't have more than 300 employees, but that applies to your affiliates as well. However, if you have more than one physical location, you might still be eligible for a second draw loan if there are not more than 300 employees per physical location.
And Paul, the 300 employees, what period do you look at? I know people have had sort of that question, given that many people have many fewer employees now than they did previously.
So our understanding is that it's the same as the PPP program before. It's 12 months prior to the date of the loan, to the date of the loan application rather, or as compared to 2019.
So I guess how that would work is you could look at each pay period for the last 12 months and average that out to see how many employees, which for many of you is going to be much lower. And it is important to realize that it's 300 employees is the cap now, whereas under the original PPP, it was 500. So, for some of you that qualified when we were between 300 and 500, you're going to have to look and recalculate probably over the last 12 months to see if you'll now qualify under the smaller number.
Yeah, and I would say, just because, a little bit of an editorial comment, I think one of the themes that we see with the second draw loans overall is that they tend to be a little bit more targeted than the original PPP program, in the sense that they're trying to get to some of the smaller businesses. They're trying to, they're excluding the public companies. And then there's certain exceptions that are specifically made for the hospitality sector. So as an example, on the next bullet, your second draw loan for most small businesses would still be the same 2.5 times your average monthly payroll cost. But if you have an NAICS code that begins with 72, which includes the food services sector, you are entitled to a little bit more in the sense that you would figure out your total loan amount by multiplying by 3.5 instead of 2.5. So it's a little bit more targeted.
And I think it's important to note, given what Cheetie mentioned about having trouble spending the money in that 60-40 split, that 60-40 split still exists for the forgiveness of the loan. And part of the reason for that is it goes back to the why they passed the PPP, which was to keep people employed. And, sort of not recognizing that for businesses that are shut down, employing people to do nothing or employing more people than you can use doesn't make any financial sense, even with a grant from the government like this. I know people did a lot of very creative things in restaurants to try and use as much payroll as possible. And we'll see, when you apply for the loan and when you get it to start your covered period may be very important, because if you are in a severe lockdown situation like Los Angeles right now and maybe other communities, you might want to time it and say, do I delay applying? But then the concern is, are we going to run out of money like we did the first time? And so, getting the application prepared, teeing it up with your bank might be sort of really important, and then see about whether, if you have a good relationship with them, when they're going to process the application, when you'll get the payout, to see to what extent can you time that to try and match up to the local circumstances. Because I agree, the next 4, 8 weeks or even 12 weeks could be more like we were in March and April than like we were in the summer, unfortunately.
I had a quick clarifying question for you, Jim and Paul. You guys had mentioned that, you would do the calculation for your payroll over the past 12 months, but you can also calculate it over 2019, correct?
Correct. So that's both for counting your employees and for doing the calculation of the of your payroll. So, you could look, and those do not need to use the same periods. So you could count your employees over the last 12 months and then do the payroll period for the loan amount for 2019, we think. One thing we should sort of say here is the SBA is supposed to issue guidance relating to the new PPP in the next week or two. And if you remember the initial PPP, they were rolling out guidance so that and some of the guidance significantly changed what we thought the rules were and what they were supposed to be. And so a lot of these issues where things are not perfectly clear, I think may be clarified like that, because, you have a very different payroll in 2019 than you do over the last 12 months. If you are under 300 employees in both periods, then you just use 2019 for both and there's not a question. But if you had 500 employees in 2019, but you only have 50 now, then are they going to let you use the prior period for your loan and count your employees under this one? It's not perfectly clear. I would suspect that they won't let you do it, but I think it's important to watch as the guidance comes out.
The quarter comparisons from 2020 to 2019, you have to compare all 4 quarters, because the first quarter of 2020 was mostly normal.
Right.
So the way that the statute reads is that you had gross receipts during the first, second, third, or only with respect to an application submitted on or after January 21, fourth quarter in 2020 that demonstrate not less than a 25% reduction from gross receipts of the entity during the same quarter in 2019.
So it's only one quarter you have to look at, not all 4. And then for some of you that are seasonal employers, then they do give a separate rule for that and about how you measure it. And then one of the questions that you may have, Cheetie, about given your circumstance with the different types of entities in one location and applying, what they looked at before was based on the tax identification number of the entity. So if you had one entity that owned all 3 of those businesses and they were at one location, then you had to apply together because you could separate out. If one business owned 10 locations, then you could separate out by location if you were a restaurant or in the food service industry, but you couldn't bifurcate a particular location. And I would assume that they will follow that kind of rule again. So if, the music venue is owned by the same entity that owns the restaurant, then you may have to look at what's more beneficial, getting the shuttered venue grant or getting the restaurant PPP.
So we couldn't do both because we're under one tax ID number.
Yeah.
Even though our payroll is separate, but I don't. Yeah.
Yeah, so you have separate, so you probably are separate from a bookkeeping perspective, sort of how you divide. That's one of the things, because the shuttered venue grant is something that's completely new. We don't have any guidance on that. So, and the statute is again, not too detailed. So that is something that I think we will have to look at and try and understand the guidance for that and how they divide that up. And if they go into a little more detail about, sort of what when you're ineligible for receiving both. But certainly how it's written now, I would guess that you would not be able to get both.
Thank you.
So moving on to the next slide, there's a couple other points we'd like to hit on the new coronavirus relief bill. One of them is that when you get one of these new PP loans, and I believe this also applies to the second draw loan also, now you can choose covered period. You can choose the duration of it as long as it's between 8 and 24 weeks. That's new.
But I think, isn't it true that you can't just pick any 8 or 24 weeks? It either begins on the date you receive your loan or the first payroll period after you receive your loan. Because that part of the statute wasn't changed. The one difference is, initially when the PPP was put in place, we had the 8-week period, and then they introduced the 24-week period later. So now they're allowing you to choose up front. And I've had people ask me, why would you choose the 8-week period rather than the 24-week? And the reason for it would be, if you're going to use up the full amount over the 8 weeks, you're able to apply for forgiveness sooner and have it off your books than if you are, have to wait to the end of your 24-week period to apply for forgiveness.
And kind of, even on that point, I don't think we've seen any specific guidance on this yet, but I would imagine that, we have that, owner compensation. It wouldn't surprise me, not to read the tea leaves, but if that continued to be prorated in some way, so that if you are trying to find that magic date, if it's at 12 weeks rather than at 24 weeks, you can plan around that so that you can get it within that period. That's not guidance, but I would say that wouldn't surprise me if that came out. Moving on, it also expanded the permitted uses of PPP proceeds. And this applies, both to new PPP loans, but it also applies to PPP loans that you might have already taken out. And these new permitted uses, the first one is certain operating expenditures for certain software or cloud computing services. So if you are, if you had to buy new software so that you could do delivery and takeout, that's an example of something that would fall there. Property damage or looting costs from public disturbances during 2020 that were not covered by insurance. So, if you had broken windows or, tables or chairs stolen and they were not covered by insurance, that would fall under permitted use of PPP proceeds. Then you also have supplier costs for goods that are essential to your business that were made either pursuant to a contract order or purchase order that was in effect before the 24-week period, or for perishable goods that were in effect before or during the 24-week period. And I'm trying to think of an example off the top of my head, but if I'm guessing that if you have any kind of contract that, ingredients coming to your restaurant on a regular basis, and you had it in effect before your PPP loan covered period started, that would be an example of something that might fall into that category. And then the last new category is worker protection expenditures to comply with COVID-19 health requirements or guidance. So any kind of those plexiglass shields or personal protective equipment like masks would fall under that category.
Yeah, and one question that I know I've already had is in upgrading of air filtration systems. Is something like that a worker protection expenditure? And certainly, arguably, it is, if you're doing indoor dining, and usually those kinds of expenditures wouldn't be permitted under SBA loans. But I think because of this provision, I think it might be. And just to be clear that all of these expenditures that were in the bill previously, like rent and things like that, that's for the 40%. So these are other uses of the 40%, which unfortunately, I think most of you probably didn't have too much trouble covering the 40, spending the 40% because of the rent issue that was mentioned, because most of you still had to be paying some form of rent.
So the new covered, expenses covered retroactively for PPP for round one.
Yes, that's my understanding.
Yeah, if you haven't applied for forgiveness yet, if the forgiveness has already been processed, then our sense is you can't go back. But if you haven't applied yet for forgiveness, then you can include these kinds of things. One of the things that I know some people have been looking at, because they did get some rent forgiveness or rent abatement for a period, or they said you can delay rent. We certainly have had people who looked at that and said to their landlords if they could restructure that a little bit and pay some rent now and then lower sort of later on to spread it out so that you can spend some rent money during the covered period if you're having trouble spending the 40%. So that looking at things like that on your payroll and with payroll and other expenses, because I know rent is still sort of the biggest thing that's hanging over a lot of people's heads. And I had one person from the industry that I talked to who did talk to her landlord and was able to get them to adjust. They had said, oh, we'll give you a month free, but it was the month during her covered period. And she's like, really, I'm going to need the month after my covered period is done as free rent. And the person was like, fine. And so she was able to adjust that. So if you have a good relationship with your landlord, working with them on that kind of expenditure might be useful.
I think one of the other new and hopefully exciting parts of this new COVID relief bill is that it also is trying to simplify the PPP forgiveness for PPP loans that are only up to $150,000. Later on, I think we're going to talk a little bit about some of the complex calculations that go into, figuring out loan forgiveness. But if you have a smaller loan, it's going to be a one-page certification and it'll be substantially simpler. And then the last one, it permits the deductibility of expenditures made using PPP proceeds for tax purposes. And this overrides a previous IRS interpretation. And kind of the idea was that when the original bill came out, the bill was very explicit that if you get a PPP loan, it does not count as income for you. But the original statute didn't say anything about the expenses. And so what was happening is that you were getting this loan, and then you couldn't deduct your regular business expenses, which was not looked upon well.
Right. It was the business expenses that you had used for forgiveness. So, those, they weren't allowing you to deduct, and now Congress overwrote that.
Yeah. So those are the highlights of the new COVID relief bill. We are starting to see people look a little bit into the PPP loan forgiveness application process, and kind of at a high level of what this actually is that when you're ready, you'll submit your PPP loan forgiveness application to your lender. The lender will review that application and has to give you a decision within 60 days of receiving the completed application. During its review, the lender can reach out to you. And if the lender needs more information or documentation, it's going to ask you for it so that it can come to the right loan forgiveness decision. If your lender denies PPP loan forgiveness in any amount, it'll has to tell the SBA and provide its reasoning, and it has to tell you, the borrower, also. If you disagree with the lender's loan forgiveness decision, you have 30 days from receiving the notice from your lender to ask the SBA to review that decision. And from there, if you really want, you can appeal to the SBA's Office of Hearings and Appeals, which will take on a little bit more of an administrative proceeding. We don't expect a lot of people to get into that, but that option's there. The SBA can review any PPP loan that it wants for borrower eligibility, loan amounts, the use of proceeds, or the loan forgiveness amounts. As of now, the new COVID relief bill hasn't touched any of the loan application process. And so this, we expect, is still valid. The next question is, what loan forgiveness application form do you use? So we have 3 that are floating around right now. If you have a loan that's $50,000 or less, or the total amount of your PPP loans, including your affiliates, is less than $2 million, you would use Form 3508S. It's a smaller amount. You don't need to do all of the complicated calculations. The next form is called 3508EZ. And the idea behind this form is effectively to incorporate a lot of the safe harbors that were brought about by the PPP Flexibility Act earlier this summer. And there's 3 ways you could qualify to use this form. The first is, if you're self-employed, an individual contractor, a sole proprietor, but you had no employees, and then you didn't include any employee salaries in the computation of your average monthly payroll when you applied for a PPP loan. The second way is if you didn't reduce the salary or wages of any employee by more than 25% during the 24-week period compared to the period between January 1 and March 21, and you didn't reduce the number of employees or paid hours of employees between January 1 and the end of the 24-week period, but not including any inability to rehire those employees or those employees that refused to have their offers or their hours restored. And then the third bucket is very similar to the second bucket, except that the second half of the exemption that you're relying on is that you were unable to operate at the same level of business activity as before February 15, due to compliance with COVID-19 requirements or guidelines issued between March 1 and December 31 of 2020. Kind of an important thing to note about that is that the interpreting regulation behind that explicitly says we know that there's been very little from the federal government, and we know that local authorities are really the ones giving the guidance right now, even though in the regulation itself it explicitly lists HHS, CDC, OSHA. If you are relying on guidance from, let's say, New York City or the city of Denver or the state of North Carolina, for example, that you can rely on that guidance and still meet the test there. And if you don't fall in those categories, you would use the complicated form 3508. In addition to that, the thing to look out for is the new Simplified Forgiveness application. And this is for PPP loan amounts of up to $150,000. It's going to be a 1-page certification, and it's going to describe the number of employees that you were able to retain because of your PPP loan. It's going to describe the amount of the PPP loan that you spent on payroll costs and the total PPP loan value. And so substantially simpler, no calculations. Now, you still have to comply with the PPP provisions, but notably your documentation retention period is also shortened. So before it was 6 years. Now it's 4 years for any of your employment records and then 3 years for all of the other stuff. So on the administrative side, also a little bit less burdensome. Notably, this form is going to come out, or it's supposed to come out within 24 days after the enactment of the bill. So that should just be within a couple of weeks, and then these loans are continually being refreshed and restated. So we would recommend going straight to the SBA website to get the latest version of all of the application forms as they come out.
May I jump in with a quick question? Just wanted to see if you could clarify. A lot of people are concerned about the line that says have used or plan on using or will be using all of your PPP money from round 1 in order to qualify for round 2. Would you mind clarifying that a little bit?
Yeah, what we think that means is that before you get the distribution of the second loan, you have to have spent all of your first PPP loan on PPP appropriate expenditures. I know this is something that people are having some trouble with, just because if they don't have the expenses, how can they spend it? There is some question about whether you can pay it back and just sort of like pay back that money, and then will that be enough that you sort of paid it, and then you can sort of reapply. And that's not perfectly clear from the statute, but we're hoping that that's something that will be clarified. But what it says is you have to have spent everything from the first loan before you get the second loan. And so as you're applying for the second loan, you have to have some idea of how long it's going to take them to process it and how quickly you're spending it, because you are certifying in the application that you will have spent the money on the first one.
So that can extend past that 24 period?
Yes.
24-week period.
Yeah. So this is, a lot of people, during the 24-week period, they weren't able to spend all of the PPP, so they're not going to get 100% forgiven, but they still might have 20% left over. And so now the thing is that for that 20% you have left over, you still have to spend it on PPP appropriate expenditures, we think, and 60% still need to be spent on payroll. But now this added requirement is you need to have spent this before you can draw down on the second one. And before, people thought that they had a couple of years to spend it. So they could have really, if they're willing to pay the 1% interest and treat it as a loan, there wasn't any time limit on spending, but now there is if you want a second PPP. On the shuttered venue grants, it doesn't seem to be that's that's not a requirement for that, because they're separate, the PPP and the shuttered venue. So that's another thing if you're choosing between them, looking at all the different requirements. And I know we wanted to try and get to some questions, so I'll go through this quickly. How you calculate the loan forgiveness, looking at the forms actually can be very helpful because it does walk you through the calculation, even though it can be kind of mind-numbing and a little complicated. It is helpful to look at the form and the instructions as you're trying to figure this out. But 60% payroll cost, and we'll go through in a minute what is payroll cost, and then that other bucket that has now been expanded can be the 40%. So that's things like rent, utilities, and now it includes supplier cost and worker protection expenditures. One question that has come up a lot is you have your 24-week covered period, and let's say your covered period ended on November 10th, but your payroll is the 15th of every month, the 1st and the 15th. So, what happens to that payroll you're doing on the 15th? You are able to include that period up to the 10th of November in this example, as long as you're paying it on your next sort of regularly scheduled payroll period. So for some people, especially people that have twice monthly payrolls, that was maybe just enough to push them over, being able to get 100% forgiveness. So that's an important one to remember. And we can go to the next slide. These are the payroll costs, and I won't go through all of them. I think you have reference to this. One of the important things is that, compensation includes, salary, wages, tip income, sort of everything that you would put on a W-2 as an employer, that gets, you're able to include in payroll costs. And you also are able to include some employee benefits. You are able to include the payment of state and local taxes assessed on compensation. Things like state unemployment insurance, you would be able to cover. Our sense is that workers' compensation insurance, which is paid generally to a state agency, that is not covered as a payroll cost, even though the guidance isn't perfectly clear on that. And then there are separate rules for independent contractors and sole proprietors. Another question that has come up is about the 100,000. You're not able to include compensation above 100,000. So if you have an employee making 150,000 a year, you're only able to include the pro rata share up to 100,000. So if you're doing the 24-week period, that would be $46,154 that you could include. And if you're doing the 8-week period, it's a little over $15,000 that you can include as payroll costs that you can count towards loan forgiveness. I mean, these rules are very, very complicated about when you reduce loan forgiveness, if you lowered people's wages or you reduced your head count. For most people in the restaurant industry, this isn't going to be relevant because there's a carve out for if you were not able to fully reopen under health restrictions. And this is what Paul was referring to when he mentioned, even though the statute says federal health restrictions, the SBA has indicated that state and local restrictions also apply. So if you were not able to reopen fully, like all of you have not been able to, then you don't have to worry about this complicated formula for full-time equivalent employees. You do need to still look at, for the people you do have employed, have you reduced their salary by more than 25%? So if what you're paying them now compared to the prior sort of period, if those match up or are less by 20% or something, anything less than 25%, then you also don't have to worry about this reduction. For your hourly wage employees, you do look at the hourly wage you're paying, not the hours you're paying them for. So if you're paying someone $15 an hour and they used to work 40 hours a week, now you're paying them $15 an hour and they're only working 20, that doesn't trigger this dollar for dollar reduction because you're looking at the hourly wage for them. So that, as long as you didn't reduce the $15 an hour by more than 25%. And here's where we explain the restrictions that if you're not able to reopen, then you don't have to worry about the headcount reduction. This was really important for this rule to be put in place because for restaurants and others, this would have made the PPP just absolutely useless if they didn't put this exception in place. And there also is a safe harbor if you reduce people's salaries, but you put them back up by December 31st of 2020, then that was also another safe harbor. And when this was put in place over the summer, they thought, well, by December 31st, we're going to be out of this and everything's going to be back to normal. So as you can see, they sort of misunderestimated at every turn about when things would get back to normal. The next thing, again, the use of the loan proceeds. This is sort of what, Cheetie, your question was, you don't have to spend the entire loan proceeds during the 24-week period, but it's only what you spend during the 24-week period that's going to be eligible for forgiveness. So when you're calculating the forgiveness, and even though the guidance isn't perfectly clear, we are still recommending that people use what they didn't spend during the 24-week period on permissible expenses, which luckily now are expanded. So you might be able to use more. And now there is this added timing restriction that if you want a second PPP, you're going to have to spend down your first PPP before you take the second. And one of the questions, again, to keep track of is if you return what you have left of the PPP, would they allow you to take a second PPP loan? Because, you might have 40,000 left, but your new PPP loan might be another 300,000. So you really need that rather than just keeping that 40, and whether that will count as quote unquote using it before the second draw. It's unclear from how things are drafted. So that's something to watch out for if you're in that situation.
In December, the SBA formally published what we're now seeing as the necessity questionnaire. And so if we kind of remember back to when the PPP program first came about, there was a little bit of controversy over businesses that people thought were a little bit too big getting PPP loans. An example might be the Los Angeles Lakers. And people were saying, how did they qualify for a PPP loan when there's such a huge organization? And so kind of the history behind it is that the SBA kind of always required borrowers to assess their economic need in certifying their PPP loan request. And the standard was, is this loan necessary for you? Well, after some of the criticism, the SBA announced that it would review all loans in excess of 2 million. Well, last month, the SBA formally published Form 3509, which is the necessity questionnaire. And it's for borrowers, who got those loans in excess of 2 million, but it's to help SBA reviewers evaluate the necessity certification made earlier in the application process. Now, the SBA might ask for additional information, but our understanding is that you would have a better opportunity to provide a more thorough and supplemental narrative response if that were to be the case. If you receive a necessity questionnaire from your lender, it's due back to your lender within 10 business days of receiving it. So what's next?
So I think the big thing of what's next is the guidance on PPP2. Which I think will have a lot more detail and hopefully a lot more answers to some of your questions as that comes out. And that guidance is supposed to come out within a set period of time, so it should be out within the next couple of weeks. We suspect that the SBA might roll out some of the guidance like they did last time in little bits and pieces, but the other thing we know is that banks are also gearing up from their side they have to redo the applications for PPPs. They have to put in place the review process. So it might be good for you to be in contact with your bank. There's no requirement that you go back to the same bank for the PPP2, as far as we know. Because I know some people didn't necessarily have a wonderful experience with their bank. Katie seemed to have a good one, but many others did not. And so, but talking to the bank so that you know when their application is going to be available and you can start putting it together and working through all these different moving parts, I think is advisable. And I don't know if, we certainly did receive a number of questions, and we tried to address some of them as we went through. And I think certainly a lot of the questions related to things like the time periods and how people can calculate the PPP 2 loan. And so I think, sort of many of those things, if you go through the slides, we've tried to outline what the periods are for those, and we'll see if there's additional guidance or if they give us any more flexibility. Because one of the keys here again is, they gave us a lot of flexibility over the summer, and that was good, but it's still probably not enough for many restaurants, especially given that you are still in sort of a reduced operating mode.
One question, that I had was, so for operators with multiple businesses and, separate LLCs, but maybe they have like a parent LLC or company, like particularly thinking restaurant operators with multiple locations, is there any benefit to applying separately for each versus applying via the parent company name? And what are your thoughts on that?
Yeah, so it's funny. I talked to a lot of people early on as they were applying for the first loan because, depending on the numbers, because you did have originally the 500 cap and now you have the 300 cap. So if you aggregated everybody, if you went over that number, then you're almost forced into doing it on a location basis. The one good thing about doing it on an aggregate basis is it did give you more flexibility to move employees from one location to another. So a place like Zingerman's in Ann Arbor, they have the Roadhouse, they have the deli, they have takeout, they have, and their mail order. And by applying at the parent level, they were able to move employees to the mail order business, which, you know, was booming. And so they were able to then keep a lot of people employed and satisfy some of the test. So it's very, very fact specific, but as we started to think through some of those things, that flexibility for some businesses was really beneficial.
On that note, can a previously issued loan be amended to include additional locations? So if you were kind of juggling your spots, could you do that?
No, because you can't reapply for PPP1, you know, that's closed. So, but you can apply for kind of PPP2. And I think what we have discovered, what we've concluded, Paul, is that if you didn't apply for PPP1, you still can apply for PPP2. You know, in existence previously and all of that kind of stuff. Because, you know, some people looked at it and said, oh, I'm going to do the employment tax credit, you know, rather than the PPP. Or if you got an idle loan, you couldn't then get a PPP loan unless you rolled it into it. So some people decided not to do the PPP. But that doesn't preclude them. So you can add those locations now, but you can't go back and get more money for the previous one.
Going back to a question about forgiveness, can the simplified form for loans under 150,000 apply to the first round of loans or just the second draw?
It's our understanding that it would apply to the first round of loans as well. Yeah.
Which will be useful. I know some people have really been struggling with the forgiveness forms. But you know, looking at the instructions, as I said before, will be helpful. It'll be interesting to see what this new simplified form looks like. Hopefully it will be really simplified. In the meantime, one thing I could talk about, I noticed there were a bunch of questions from restaurants that opened during COVID. I know, you know, we have a couple in our neighborhood that have opened during this period. It appears that they are not eligible for the PPP2 loan because, you know, there's nothing to compare your current activities to. And so they, maybe there'll be the ability to get some flexibility from the SBA on that, but as written, the statute just says you can't apply, which is unfortunate.
I have a colleague in New York City who had to close outdoor dining in July after 3 weeks because they were losing money. And then they reopened in October with 25% dining and then closed again 10 days after that because they were losing money. And not many people wanted to dine inside. So now they're closed like most restaurants in New York. And they have a lot of bills and, you know, operating expenses. And as owners, they haven't been compensated since July. How can they get PPP if they haven't had any payroll to base it on? I imagine that they're using 2019 numbers, or will 2020 numbers for payroll impact second draw?
Right, so you can do, you know, the last 12 months. So that would cover some period where they were operating, or they can do 2019. So then the question becomes, will they be able to spend the money during the 24-week period and, you know, to get the optimum forgiveness? Or if they can't, is it worth it for them to have this if it's a loan, you know, at that 1% interest? And, you know, some people feel, okay, I think I might be able to spend some of this so I can get some forgiveness, and what's ever left over, you know, it's still better than nothing to have something at a 1% interest rate. It is important to remember that an owner can pay themselves compensation. And, you know, it's something that would need to be included on a W-2 or if you're organized as an S corporation or partnership on a K1 as wages, as anything basically that's subject to employment taxes can count as wages for you as an owner. Even though you might be getting wages and profits, anything that's subject to employment taxes or self-employment taxes count as wages for these purposes. So, you can include that in calculating what loan you get, and then also calculating your forgiveness. So, changing how you pay yourself as the owner is something that you should be looking at and thinking about.
Can funds obtained through the PPP round 2 be used to pay for allowable expenses that are outstanding and past due? For example, can they be spent on rent, utilities, vendor invoices from March 2020 until now?
Yeah, so the answer seems to be yes, because what they say, certainly for PPP1, was it's anything that is paid during the period. And so if you had things from, if you were paying your utilities in arrears or something, or you got your PPP loan and you pay your rent at the end of the month as opposed to the beginning of the month, or the other way around, then you are able to sort of count that. So we're assuming that that's going to work for this as well. And there is some ability, if you're paying things on the regular schedule, you can't prepay your rent for 6 months, but if your 24-week period ends on the 30th and you usually pay your rent on the 1st, prepaying it by a day might be something that you're able to do and get that covered. So you have some flexibility. You do have to be careful to not pay too many games. The other thing, in terms of payroll and stuff that people have been doing as they bring people back or as they lay people off, your colleague in New York who was rehiring and laying off and rehiring and laying off, severance payments are includable in payroll costs and do get counted as loan forgiveness. So, as you can give people some money there, they're not going to be providing service. It will be forgiven by the government, and it does, create goodwill among the workers and do other things. So that might be a way that you can, push off some of these expenses on the government, even if you're closed or having to close down again. And you yourself can also get severance. If you're paying everybody, 2-week severance, you can pay yourself 2-week severance too, as the owner, as long as you're counting it as wages and you're calculating it on the same basis that you're doing it for other employees.
Are bars included in the 3.5 times payroll for this round of PPP if they don't have food?
Yes, so bars are included in the 3.5 because they are covered by the 72 NAIC code. So drinking places are included, even if they don't serve food.
For a restaurant that got PPP in April and the paperwork for forgiveness hasn't been done and processed yet, will they be eligible for the second round?
Yes. So the second round is tied to spending the PPP one. It's not tied to having your loan forgiven or having your forgiveness application processed.
Wow, that was really helpful and enlightening. Thank you so much, Paul and James from Arnold and Porter, and for the IRC and the Beard Foundation for making this possible. Thanks, Katie, for being so eloquent as always. Please go to saverestaurants.com to get a lot more information about PPP and other related information, and to help hopefully push for the Restaurants Act in the coming months.